ConocoPhillips was added to the AAP portfolio on Friday. Stephanie, you've been building a position in this one over the last couple days. Now, you already have exposure, though, to the energy sector. You've got Occidental, you've got Lynn Energy. Why increase your exposure here?
Well, the group was a disappointing sector last year, one of the worst performing. It's done a little bit better this year, but Conoco specifically has underperformed its peers. Like the fact that it has already done the restructuring program all of last year. It spun out Phillips 66 and the refining business and the chemicals, etc. So they are ready to go. They are ready to focus on growing their E&P business. They've got a solid balance sheet and a very good dividend yield. So it was kind of that, and valuation that kind of was a no-brainer. Plus, it has a substantial exposure to natural gas. So we wanted to balance out our oily names with nat gas.
Okay, now they're aiming for production of 3 to 5% over time, which is slower than some of the other E&P companies. Do you think that could be conservative?
I do think it can be conservative because I think the company can now focus on growing and expanding and really gaining market share in all of its various different fields and assets. And 3 to 5% will actually be better than some of the majors, which I know it's not a major anymore, really, but the asset size is like a major. So I think that again, the natural gas exposure, the combination of having some oil assets as well, and a management team that's really now focused on delivering shareholder value. Oh, not by the way, also at potential asset sales, I think are all very positive for the stock.
Okay, Lynn Energy is a newer one also to the portfolio. It's an MLP, which is something different. What's the thought process here?
Well, this one is just, it's a nice complement to Oxy and ConocoPhillips. So we have Oxy, which is kind of oily, if you will, with now a good yield. ConocoPhillips, more natural gas, and then Lynn is kind of in the middle. I mean, it does have more nat gas exposure, but I like that it's kind of a conservative way of playing the recovery. And you get a nice distribution at about 8%. And I think they're going to be very aggressive with their M&A activity, and I think that will lead to better than expected production growth down the road. One name that we are actually looking at to also add as a complement to these names would be an oil service company. We've owned Schlumberger. We sold it just about at these levels before the stock fell on a negative pre-announcement. It's one that we are looking to get back into in the next couple of days, should we see any kind of pullback, because I do think that oil service is still a place where you want to be long term.
Okay, well, there you have it. AAP does have a nice exposure to the energy sector, but they're looking to, add a little complementary business on there with the oil services.